Hi there, my name is Victoria, and in this video we will address the 7 most common mistakes that many investors make, especially during market downturns. And I bet that you have been a victim to at least one of those mistakes. So know if you've been feeling confused or uncertain about what to do next, let me reassure you, you're not alone. It's very easy to get lost in the noise, but it's crucial to stay on track. And this is why we are here. So let's dive right in. During volatile times, emotions can and will cloud judgment, and it's very easy to feel like you're losing ground when price is dipping. So this is the exact moment when you should buy, not when you should sell. Don't get me wrong, because the key to success in investing is buying when the market is low and not when it's high and everybody is celebrating. If you allow yourself to be swayed by panic or overexcitement, you will miss out on opportunities. So let's address the first common mistake, and it is called letting external noise influence you. So market influencers and commentators often make, or all the time, basically make dramatic predictions based on trends or short-term market movements. And the truth is that these predictions are rarely reliable or helpful. So please stay focused on your strategy and ignore the noise that encourages panic selling or speculative buying on the media. Second trap is, I call it the picture-taking trap. So basically, this is a super common pitfall in investing when you see a big gain and it's tempting to admire the results and just pause everything else. Because like in boxing, the moment after a successful hit is when you should follow through, not when you should admire your work. And in investing, seeing a quick rise should prompt you to keep going, not take a picture of your gains. Because if you get too attached to that snapshot, it can lead to emotional decisions when things will fluctuate. Because you never owned that money, because it's unrealized profit. It was never yours. You're not really losing something. The third mistake, and I know a lot of people who keep doing this even though they should know better, and it is about predicting price. Be aware of anyone trying to predict future prices with certainty at any level. Predictions are just guesses. Nobody knows, nobody can know. Historical trends also don't guarantee future performances, and anyone claiming that they do know is misleading you. It's not true, doesn't exist, okay? Focus on what you know and trust your strategy rather than relying on arbitrary predictions. Which leads me to my next common mistake. Number 4 is, please don't get distracted by short-term price moves. The market is full of them and you are investing for the long term. Don't make decisions based on a single day's price change. You should stick to your strategy even when things are volatile. Just keep calm. Number 5. So I think this is one that most of you don't quite grasp, and it's not buying when it is uncomfortable, and this is how you should do it. The real opportunities often come when prices are down and sentiment is negative, not when it's up, because then this is a time where prices are up. So, the market is kind of trying to convince you to stay away from it, but you should not fear the dip. You should use it as an opportunity to build your portfolio with undervalued assets, especially when the fundamentals of this asset didn't change, like for metals, for example, also works for cryptos. Getting too attached to short-term gains or losses it's very easy to feel pride and frustration based on day-to-day movements. But real success comes from long-term consistency. You should stick, and I know I have repeated it quite some time, but I will predict it probably a few more times, but you gotta stick to your strategy. And don't get caught up in emotional highs and lows that come with short-term price action. Don't do it. Just stick to what you know that works. And the last but not least mistake that is super common is saying that you mean it long term, like investing, but you're acting short term. Remember, long term investing is about accumulating assets, not chasing quick profits. And this principle holds true for everything from stocks to commodities to cryptocurrencies. Also works for Forex. If you want to hold a specific currency because you think, go for it. The market will give you plenty of opportunities if you can stay calm and patient. So in closing, stay focused on the long game. Build a portfolio, add to it consistently, and avoid the distractions that will lead you off course. And remember that the best time to buy is when others are fearful. The best time to buy is when nobody's talking about it, okay? Not when everything is up and everybody is celebrating. And stick to your strategy. Avoid emotional decisions and always keep the bigger picture in mind, because boring is what makes money. See you next time.